Hello everyone, I am CA Jude Dsouza. So today we will see what do we mean by consolidated financial statements. It is a very important topic when we come for financial reporting from an exam point of view. So we'll see the basic concepts or the key definitions. First is parent. A parent company is the one who holds or controls the other company, like parents control us. And parent will always control the children. Here children we will call it as a subsidiary. So subsidiary company will have its own business, it will have its own management, but it is controlled by another company called as a parent. And when we bring parent and subsidiary together, it is called as a group structure. Example, Reliance, it has telecom company, it has oil company, it has manufacturing. When we bring all the companies together, owner is same, it is called as a group structure. Next, if you see your example, we have a parent company. Under the parent, there are two companies, or we will call it as children or subsidiary. So first, in subsidiary A, parent has 60%, in subsidiary B, parent has 80%. Rest 40% and 20% is held by other, which we will call it as minority interest. So under group structure, we will be having two or more companies. One company will be the head, or we will call it as parent. Rest companies are under the parent company, whom we will call it as subsidiary. So we'll see how can we establish the relationship of parent and subsidiary in the next slide. So here if we want to establish a relationship between parent and subsidiary, we will see whether how a parent is controlling the subsidiary as per IFRS 10. So first point is power. So how can we have power on another company? So if I want to have my decision making authority on any company, I will purchase more than 50% shares in that company. So if I am having 50% shares in any company, I will be called as the parent, that company will be called as the subsidiary. Once I have the power, I will get the returns. Returns can be in form of dividend, returns can be in form of interest. Since I have power, I will tell the company you do the sales in this way. This will increase the income of the company. So once I have power, I can also get the returns. Then link how I am able to use the power. Whether I am having more number of board of directors, whether I am changing the decisions of the company. This will differ from case to case. So as companies are concerned, usually we will see how much voting rights we have. If we have voting rights more than 50%, automatically a relationship of parent and subsidiary is established. And once we have more shareholding, automatically decisions will be taken by us. Then we can also see how can we determine power. First is if we want to determine power, we will see how much is our shareholding. If our shareholding is more than 50%, that means if it is 51 also, automatically we will get the decision making power. But in some cases, we might be the major shareholder and rest shareholding might be with small shareholders. There also we can have control, or we can call it as de facto control. Example, we might be having 40% of shareholding in one company and rest 60% are held by small people. Automatically we are getting the control. There also consolidation can be applicable. If I am having more than 50% shares, we will start to merge the balance sheets and profit and loss. Plus, but here in this case, if I am having less than 50% also, automatically we are getting control. Second, we can have majority of board of directors in the board of another company. Example, if I am having 10 directors in my board and 7 are appointed by another company, automatically those 7 people will not listen to me. They will listen to the company who had appointed them. Here also we will get de facto control. And third, rights arising from contract. Sometimes we might have made some contract where I am giving the decision making power, automatically control goes to other person. So if we want to establish control on any company, we can have more than 50% of shares in that company, means 51% of shares. Second, if I am having less shareholding also, I am the major shareholder and other shareholders are dispersed or widely spread. Third, I can have more than 50% of the board of directors in another company, means majority BOD are mine. And fourth, I am getting the rights from the contract, and because of that contract automatically I am getting control over the company. So these were the 4 points. How can we establish control? So here we'll see what are the consolidation adjustments. Now, once we are having control over any company, as per IFRS 10, we have to go for consolidation. Consolidation means merging the profit and loss and balance sheet, or we can call it as income statement or statement of financial position of parent as well as subsidiary. We have to merge or consolidate. So these are the 6 consolidation adjustments. First, 100% assets and 100% liabilities of parent and subsidiary has to be brought together. Then we will eliminate the investment in the subsidiary. Now parent has done investment in subsidiary. So whatever investment we show in parent's balance sheet has to be removed. Same way, whatever share capital we have shown in subsidiary company, that has to be removed. Third, we have to eliminate intercompany balances. Now, parent and subsidiary can have purchase and sale transactions between them. There they might have written creditors and debtors in their books. Once we are merging both the companies, those debtors, creditors, loans, receivable, payables, both has to be removed. Fourth, we have to calculate the goodwill. In simple words, we can call goodwill as if the value of any company is 1 lakh and I am paying 1,20,000, means I have paid more. If I have paid more value to the company, that difference amount will be called as goodwill. Usually we call goodwill as reputation. But here in simple words, when we come to our accounts, if I am paying more than the value of the assets, the difference amount is called as goodwill. Fifth, we will calculate NCI. NCI means non-controlling interest. Here non-controlling means if I am having 60% shares, I am called the parent. Rest 40% we will call it as non-controlling interest or NCI, or we can call it as minority interest. Then last, we will adjust if any fair value changes are there. It can be increase, it can be decrease. So these are the 6 key consolidation adjustments. First, we will bring all the assets and liabilities together. Second, we will eliminate the investment shown in parent company, and whatever share capital is there in the subsidiary, that also we have to remove. Third, we will eliminate the intercompany balances if any loans and payable from both the companies are there. To each other transactions, if it is there, it has to be removed. Fourth, goodwill calculation. Fifth, NCI calculation. Sixth, if there are any fair value changes. So here we'll see how can we calculate goodwill. So if I want to calculate goodwill, first we'll take consideration transferred. Here consideration transferred means how much money the parent company has paid to the subsidiary. First consideration transferred, usually it will be in cash. Then we will add non-controlling interest. Whatever non-controlling interest is there, means whatever shares are held by them, that we will add. Plus if I had the shares previously in the our subsidiary, that also we will add, minus the value of assets acquired. As I said before, whatever assets acquired I have, if I am paying more, difference will be called as goodwill. So here the format of goodwill calculation is consideration transferred, add NCI, add fair value of previously held interest minus fair value of assets acquired. We will get the answer as goodwill. Here we will calculate NCI or non-controlling interest. We have seen the meaning of NCI. You can see in the example. Here in one company I am having 70% shares, so we will be called as parent. 30% is held by others, they will be called as NCI. So NCI we will show if we are concerned about financial position statement or balance sheet. NCI we will show on the equity side. And then NCI's profit we will show in consolidated profit and loss. And NCI can be measured at fair value or proportionate share of net assets. These methods we'll see in the upcoming classes. Then NCI means the percentage of shares held by others or usually the outsiders. So NCI how we can show in our statement of financial position. Share capital means our capital, parent companies. Retained earnings, parent companies. Third will be non-controlling interest. When we are merging the financial position statements of parent and subsidiary, this will be the presentation of the equity part. Share capital, retained earnings, NCI. Then in profit and loss, we will be dividing the profit into two parts. First part will go to parent, second part will go to NCI. So these are the consolidation rules for profit and loss. So we will add 100% of subsidiary revenue and expenses regardless of NCI percentage. So first we will add 100% in the profit and loss. Then we will apportion it to date. So whenever we are acquiring any company or consolidating parent and subsidiaries balance sheet, we will see the acquisition date, whether it is acquired at the start of the year, whether it is acquired at the middle of the year. So acquisition date will be important from an exam point of view. Third, we have to eliminate if there is any sale and purchase transactions between the parent and the subsidiary. We have to eliminate or remove from the books. Then since there is any purchase and sales transactions, they might have sold it at profit because both the companies are functioning differently. We are consolidating just because the law says so or IFRS 10 says. So if there is any unrealized profit in the stock, that has to be removed. And last, once the profit and loss calculation is done, we will split the profit between parent and NCI. So these are some of the examples of intra-group transactions. Some we have already discussed. First is intra-group sales. If any parent is selling to subsidiary, subsidiary is selling to parent, both has to be removed from purchase as well as sales. Then intra-group loan or balances. If there is any receivable and payable between parent and subsidiary, it has to be removed. Any interest income or expense has to be removed. Then intra-group dividend. If subsidiary is paying dividend to parent, when the balance sheets are merged, the dividend has to be removed. But NCI's dividend will be shown in our statements. Then unrealized profit in inventory. If the parent has sold any goods to subsidiary at profit and subsidiary has not sold that goods, that means the goods are in inventory. And whenever we are valuing inventory, we will value at cost. So that profit has to be removed. So these are some of the exam tips or quick reminders. Whenever we are solving consolidation, we will see how can we calculate goodwill. Goodwill means if we are paying more than the asset value, difference amount is called as goodwill. Then we'll see the acquisition date, whether acquisition was done at the start of the year, whether acquisition was done at the end of the year. Then we will eliminate all the intra-group transactions between parent and subsidiary. Then we will see how much is the share of NCI or non-controlling interest. And non-controlling interest, we cannot show it as liability. It has to be part of equity. Then fair value we have to check at the acquisition date. So we can see what and all things we covered. We see what do you mean by a group. We saw the meaning of power. So here power means I can have 50% of shareholding, or majority of the board of directors are mine, or if any rights are given by any contract, or majority shareholders are we, means it can be less than 50 also, and others shareholders are dispersed, then also we will have control. Then we also saw some of the transactions which we can eliminate, which we have to eliminate, and how to calculate goodwill in CI, and how it will be shown in profit and loss and balance sheet. So this was for the today's class. We have done about consolidation. Next we'll see in the other classes or upcoming sessions. Thank you. Have a nice day.